All right, ready to dive into DeFi. Decentralized finance, it's changing the game, and we're breaking down the hottest projects out there.
Yeah, DeFi is really shaking things up, making finance way more open and transparent for everyone. Imagine lending, borrowing, trading, all without the middleman. No banks, just you and the blockchain.
That's wild. A global financial system running 24/7, right from your fingertips. But there's a lot out there. It can be tough to know where to begin.
Definitely.
So let's start with a big one. Uniswap, the OG of decentralized exchanges.
Ah, Uniswap. They really disrupted things back in 2018.
With those automated market makers, the AMMs.
Yeah, AMMs. Instead of order books, they use these liquidity pools. So anyone can be a liquidity provider, throw in their crypto, and boom, you've got a way more efficient trading system.
So even if I'm new to this whole DeFi thing, I could jump in without needing a ton of cash up front.
Exactly. And you're not limited to just like Bitcoin or Ethereum. Uniswap's got a massive selection of Ethereum-based tokens. Trade directly from your wallet. It's all there.
Okay, that's pretty slick. But it's on the Ethereum blockchain, so we got to talk about those pesky gas fees.
Right. Those can be a pain. They go up and down depending on how busy the network is. Best to keep an eye on that and maybe trade when it's a bit quieter.
Good advice. Now, shifting gears to Ahav. This is a major player in DeFi lending. It's like the anti-bank, you know. You're in control of lending and borrowing.
Yeah, and the cool thing about AV is their flash loans. These things open up all sorts of opportunities, like arbitrage and these complex trading strategies you wouldn't dream of with traditional finance.
Wait, hold up. You're telling me I could borrow, what, a huge chunk of crypto without putting up any collateral, as long as I pay it back within the same transaction?
That's the gist, yeah. It's mostly developers and hardcore traders who use it. But it just shows how Ahav's pushing the boundaries.
Wow, okay, that's next level stuff. And they have that collateral switching thing, right?
Yeah.
Swap out the assets you used for collateral right in the middle of a loan.
Exactly. Way more flexible than your typical bank.
No kidding. Plus, they let you pick between stable interest rates and variable ones. So whether you want predictable returns or you're feeling risky, Av's got you covered.
And don't forget their AAVE token. Gives you voting rights, and you can stake it for, some passive income.
Nice. Speaking of keeping things simple, if Av is like the DeFi rebel, Compound is the friendly guide, making lending and borrowing super straightforward.
Yeah, I like that analogy. Their interest rate model, it's actually quite elegant. It's all algorithm driven, constantly adjusting based on supply and demand. So you're always getting the best rates possible.
No more arguing with the loan officer, no more fixed rates that don't make sense. I'm sold.
Exactly. And the best part, there are no minimums. You can test the waters with a small amount and see how it goes.
Love that. So how does Compound actually work? Walk me through it.
Sure. So say you want to lend out some Ethereum to earn interest. You just connect your wallet, choose how much ETH you're comfortable with, and boom, you're earning immediately.
Just like that.
Yep. Borrowing's the same deal. You put up some crypto as collateral and you can borrow against it. No credit checks, no waiting around for approvals.
Cutting out all the red tape. I like it. But what about these kick tokens I keep hearing about? What are those all about?
Oh, those are basically your receipts for lending to Compound. They represent your share, they earn interest automatically, and you can trade them back for your original assets plus the interest whenever you're ready.
So like a digital IOU that keeps growing. Pretty cool.
Yeah.
But we're talking about a decentralized system here. How do I know my money's safe?
Great question. And that's a big reason why people trust Compound. The whole platform runs on these things called smart contracts, and they're publicly auditable. Anyone can look at the code, see exactly how it all works. Total transparency.
Transparency is key, especially with finances. All right, now let's talk about a platform that takes the guesswork out of maximizing your returns. Yearn.finance.
Yeah, Yearn.finance. This one's like the robo-advisor of DeFi. It uses automation to find you the best yields. Think of it as a yield aggregator, constantly scouring the DeFi landscape, finding the most profitable opportunities, and putting your money to work.
So it's like having my own personal DeFi manager, huh? Working around the clock, finding those sweet, sweet returns.
Exactly. And they have these things called vaults. Makes it super easy to get in on the action. You just deposit your crypto into a vault and let the smart contracts do their magic. It's like set it and forget it investing, but for DeFi.
I like the sound of that.
Yeah.
But how does Yearn actually find the best returns? I mean, there's a ton of platforms and strategies out there.
That's where their community governance comes in. They use these really sophisticated algorithms, but they also take community input into account. And if you hold their governance token, YFI, you get voting rights. So you can actually have a say in how the platform evolves.
Okay, so users have some skin in the game.
Mm.
That's something we're seeing a lot in DeFi, this whole idea of community ownership.
Absolutely. And what's really interesting about YFI is that it wasn't pre-mined or anything. It was actually distributed to early users who provided liquidity. So it's a truly decentralized, community-owned platform.
Putting the power back in the hands of the people.
Mm-hmm.
Now, what about these earn products I keep seeing? How do those work?
Oh, those are specifically designed to maximize your returns on stablecoins, the ones that are pegged to the US dollar or other stable assets. Earn constantly scans the market, finding the best interest rates for your stablecoins across different lending protocols.
Gotcha. So if I'm looking for a relatively low-risk way to earn passive income in DeFi, Yearn's earn product could be a good option. And what about this Zap feature I've heard about? Sounds intriguing.
Zap is huge, especially if you're tired of those hefty gas fees eating into your profits. It basically lets you swap tokens between different liquidity pools in a single transaction. Saves you time and money.
Yearn just keeps getting better. They're making DeFi so user-friendly. Okay, let's move on to MakerDAO. Now, these guys are doing some really innovative stuff with stablecoins. Their DAI stablecoin is making a lot of noise in the DeFi space.
Yeah, DAI is designed to be, well, stable even when the rest of the crypto market is going haywire. It's pegged to the US dollar, but it maintains its stability through, get this, collateralized debt positions.
Okay, so instead of just holding my ETH, for example, I could use it to generate DAI, which is pegged to the dollar.
Exactly. You lock up your crypto as collateral and you get DAI in return. It's like taking out a loan against your crypto, but instead of getting cash, you get a stable coin.
That's incredibly useful, especially if you want to participate in DeFi but are a little wary of the volatility. So there's still some risk, right? I mean, no investment is completely risk-free, but how does MakerDAO manage that risk?
Right, so they use these things called stability fees. Think of it like interest on the DII you generated. These fees help control the supply of DII and keep it pegged to the dollar.
So the more DAI in circulation, the higher the fees, which encourages people to return their DAI, which then decreases supply and maintains the peg. Makes sense.
But what if the value of my collateral drops, like way down?
That's where those collateralized debt positions, or CDPs, come in. If the value of your collateral falls below a certain threshold, your CDP might get liquidated to cover the DAI you generated.
Okay, that makes sense. So there's a mechanism in place to protect the system. But you know what I really like about MakerDAO? It all comes back to decentralized governance. The users have a say in how things are run.
Exactly, and that's where their MKR token comes in. Holding MKR gives you voting rights on all sorts of important decisions, like adjusting those stability fees we talked about, or even adding new types of collateral.
So it's like having a voice in a decentralized central bank. Pretty cool. Now, from stability with MakerDAO, let's jump to synthetics. They're all about the exciting possibilities of synthetic assets. Yeah, it's a completely different beast. Synthetics lets you trade synthetic versions of real-world assets, like stocks, commodities, even other cryptocurrencies, all on the blockchain.
Wait, so I could be trading a synthetic version of Tesla stock, but on a decentralized exchange?
Exactly. It's like having a global marketplace right at your fingertips.
This is blowing my mind. So instead of buying and holding actual gold, I could trade a synthetic version of it on synthetics.
You got it. And it's not just commodities. You can trade synth, representing stocks, fiat currencies, even other cryptocurrencies.
This sounds like next-level financial stuff. How does it all work?
Smart contracts, my friend. You acquire Synthetics' native token, SNX, and you stake it as collateral to mint or create these synthetic assets.
Okay, so there's still collateral backing these synths.
Yeah.
But I'm not just limited to trading my SNX, am I?
Nope. You're providing liquidity to the platform, and in return, you get rewarded, and you get to participate in governance.
So it's a win-win. With all these platforms focusing on decentralized governance, it seems like DeFi is really changing what it means to be an investor. You've got more control, more influence than ever before. But going back to synthetics, is it beginner-friendly?
It can be a bit more complex, especially if you're not familiar with things like leverage and short selling.
Ah, leverage.
Yeah.
Double-edged sword. So synthetics allows for leverage trading.
They do. It can be really appealing for experienced traders, but it's super important to understand the risks involved. Synthetics also supports short selling, which means you can potentially profit if an asset's price goes down.
So it might not be the best starting point for DeFi newbies, but for seasoned traders, it's like a whole new world of possibilities.
Exactly. And don't forget, one of the big advantages of trading on a decentralized platform like Synthetics is that there's no counterparty risk. All your trades are settled on the blockchain, not through some third-party intermediary.
Right. Which brings us to another crucial part of DeFi that we haven't touched on yet, insurance. And that's where Nexus Mutual comes in.
Nexus Mutual is a really intriguing project because it tackles one of the biggest fears people have about DeFi: smart contract vulnerabilities. Code isn't perfect, and a bug in a smart contract can have some pretty disastrous consequences.
Yeah, that's a scary thought. So Nexus Mutual is like the safety net for DeFi, protecting you from those smart contract risks.
Exactly. Peace of mind for your investments. And what's cool about Nexus Mutual is that it's all peer-to-peer. It's a community-driven thing where everyone chips into a pool by staking their NXM tokens. That's their native token. And that pool is used to pay out claims if something goes wrong.
So instead of paying premiums to some big insurance company, I'm part of a decentralized community sharing the risk.
You got it. And because it's all on the blockchain, everything's transparent. You can see how claims are assessed. Members even get to vote on whether a claim is legit.
Like a decentralized jury for DeFi insurance? That's awesome. But how do they decide which protocols or smart contracts to cover?
The community decides that too. Anyone with NXM tokens can propose new coverage or vote on what's already there. The more tokens you have, the bigger your vote.
A true democracy.
Yeah.
It's great that the coverage actually reflects what users are worried about.
Yeah.
Okay, last but not least, let's talk about Curve Finance. They're all about maximizing those juicy DeFi yields.
Curve is interesting because they're laser focused on stablecoin trading. So if you want to minimize slippage and squeeze every bit of return out of your stablecoins, Curve is the place to be.
Right, slippage. That difference between what you think you're going to pay and what you actually end up paying. And with stablecoins, that's super important because they're supposed to be stable. Any slippage eats into your profit.
For sure. Curve's got this really clever automated market maker algorithm specifically designed for stablecoin pairs to minimize that slippage.
So not only can I trade stablecoins efficiently on Curve, but I can also provide liquidity to their pools and get rewarded for it.
You got it. It's DeFi opening up all these new ways to manage your money and make it work for you.
And of course, we got to talk about their governance token. What's the deal with CRV?
Well, you earn CRV by being a liquidity provider, which makes sense. It's a reward for contributing to the platform. And here's the cool part. You can stake your CRV for even more rewards. And, this is where it gets really interesting, staking CRV gives you voting rights on proposals that shape the future of Curve.
Nice. So by participating in their liquidity pools, I'm not just earning passively, but I also get a say in how Curve develops. That's like being a micro-shareholder in a decentralized exchange.
Exactly. Platforms like Curve are completely changing what it means to be an investor.
For sure. So as we wrap up our deep dive into the world of DeFi, any final thoughts? What do you hope our listeners will take away from this?
Well, I hope this shows everyone that DeFi isn't just for the tech-savvy. There are platforms out there like Compound or Yearn that are designed to be user-friendly, whether you're just starting out or you've been around the block. Yes, DeFi has its complexities, but anyone can learn the ropes and start exploring.
I'm with you on that. We covered a lot of ground here, from decentralized exchanges like Uniswap and Curve to lending and borrowing with Aave and Compound, even DeFi insurance with Nexus Mutual. What do you think are some of the common threads that tie all these platforms together?
One thing that really stands out is this emphasis on decentralized governance. Almost every platform we talked about has its own governance token, giving users a direct say in how things are run. That's what makes DeFi so revolutionary. It's about community ownership, not centralized control.
It's a democratization of finance. It gives individuals a level of power that traditional finance just can't match. But of course, we have to remember that DeFi isn't without risks.
Definitely not. Smart contract vulnerabilities are always a concern, which is why projects like Nexus Mutual are so important. And then there's the volatility that comes with cryptocurrency itself, which can definitely impact your DeFi investments. My advice: do your research, start small, and gradually increase your exposure as you get more comfortable with the technology and the risks.
Couldn't agree more. DeFi is a fast-moving space,
Yeah.
always evolving. New platforms and innovations are popping up all the time. It's an exciting place to be.
Absolutely.
So for our listeners who are ready to dive headfirst into the exciting world of DeFi, what's one question they should be asking themselves?
Here's a good one. Do you think DeFi will eventually replace our traditional financial system? Or will we see these two worlds learn to coexist, maybe even complement each other.
Now there's something to ponder. Well, that wraps up our DeFi deep dive for today. We hope you found it informative and maybe even a little bit inspiring. If you want to learn more about any of the platforms we talk about, be sure to check out the show notes for links and resources. Until next time, stay curious, keep exploring, and happy investing.